Good morning and welcome to this Moneycontrol live stream. You're watching Opening Bell with me, Nandita Khemka. First of all, a very happy New Year's Eve to all our viewers. Whether or not the bulls show up, that's something that we will be watching out for, given the fact that yesterday we did see the bulls wrestling with the bears and trying to, end the day in the green. But of course, didn't really manage to do that. But still, we did pretty well to recover from the day's low, in fact ending extremely flat for the day. So yes, the bulls did try to make a comeback yesterday, but today whether or not they show up, whether or not it will be a party for a New Year's Eve party for the bulls, or whether but in terms of the options queues, I already mentioned that there will be some changes in the derivative markets that of course will be watched out for. Put call ratio on the Nifty jumped to 0.92 vis-a-vis 0.68 in the previous session, and Sammaan Capital will be coming out of the F&O ban today. It has been in F&O ban for quite a few sessions, but today it will come out of that ban. But on that note, let me bring on board Ajit Mishra, Senior VP Research at Religare Broking, to talk about the setup, to talk about how 2026 is looking like, and what are the recommendations for 2026 as well. Ajit, lovely chatting with you. Very happy New Year's Eve to you. Of course, most of us are not in the mood to really work today, but no option. Markets are open, and markets are open tomorrow as well. Yesterday, of course, it being the F&O expiry, we saw a fair bit of volatility. But the bulls did try, to make a comeback, and we did see a good recovery from the day's low. What's it looking like today? Are we going to follow through with yesterday's strength that the bulls exhibited, or do you think it could be another range bound, boring sort of day, because volumes, of course, are expected to be thin any which ways?
Yeah, good morning, Nandita. So first of all, wish you a very happy new year, and to the entire team, all the viewers. So yes, consolidation is continuing. The last fifth, we are in the fifth week of consolidation. Volumes are thin. Activities on the stock specific front from the sectors which have been performing well for quite some time, like banking, auto, metals. Rest of the pack on the rotational basis are definitely offering stock specific opportunity, but broadly we are stuck in a range. This 500 points range, 25,700, 26,200 is something that we have been hovering in for last 5 weeks. So until we see some decisiveness, either side, I doubt that we are going to see any meaningful directional trend in the index. The good part is that banking index in yesterday's trade showed strength. On the monthly expiry day, it managed to hold the key support area around 58,700 mark, and ended around the day's high, while the Nifty was still struggling. So this gives us comfort that at least the trend is not going to reverse. Means within this consolidation, it's more of time-wise consolidation or correction that we are seeing in the markets. And the moment we see the alignment strengthening further, especially from the banking and IT pack, probably we are set for the next leg of the up move. But in the interim, stay stock specific, focus on the key sectors like banking, auto, and metals, and pick selectively from the others.
Okay, stay focused on those sectors that I know Ajit just mentioned. But Ajit, of course, metals, banking, these are some of the pockets that are exhibiting strength. But what about IT? Yesterday we saw fifth straight day of losses. For the year as well, the IT index, I think it's down somewhere around 12% or so. Although if you see the last 3-month returns, IT has done fairly well. But what does it look like, on a longer term basis, with the 1 year perspective? How would you look at IT?
So yes, though we are seeing profit taking in the last 2 weeks, but situation is comparatively better to what we were a couple of months ago. Because earlier we were struggling around the long-term averages, means we were underperforming big time on the IT pack. But at least now we have some bit of stability at, or some of these stocks, they are still holding around the record this 52-week highs. So selective buying approach is something that you should be focusing on. So stock from the mid cap IT basket like Persistent, TechM, from the large cap IT names, TCS, Infosys, HCL Tech. So these are some of the names that you should be selectively looking to accumulate on dips. Yes, for the index to make a meaningful recovery, 39,500, the previous swing high, is something that the IT index should decisively surpass. Then we'll see the actual momentum coming in the IT pack. But at least the downside seems capped from the current levels. The selective buying can be considered, of course, with the strict stop losses.
Okay. All right. Any recommendations since it's the last trading day of the year? Any trading recommendations for today for our viewers?
Yeah, certainly. So, see, while we are seeing some of the sectors, they are anyways doing well. From the other pockets also, we are getting decent opportunity. So, from the pharma space, Glenmark, after this recent decline, looks set for next leg of the recovery. It's overall comparatively strong within the pharma space. So, we expect this stock to inch toward 2130 mark in the near future. So with stop at 1980, one can accumulate Glenmark at current levels. Then we have UPL, which is outperforming within this chemical basket. The stock has almost reached to its record highs. Traction with the volume is something which we are anticipating. So 820 is what we are eyeing next as a target zone for UPL. So with stop at 772, you can accumulate UPL also at current levels.
Okay, UPL and Glenmark trading picks for today. Of course, for 2026, I'll ask you your recommendations later on in the show. But there have been some changes with respect to Jan series as well. We've had a couple of, or in fact, 4 stocks, entering the FNO universe and 4 stocks exiting. Swiggy, Vari Energies, Bajaj Holdings, Premier Energies. These are some of the stocks that will be entering FNO from today. Any of these names that would catch your fancy, and what about the exclusions? We've had, HFCL, NCC, Titagar and Cyient. These are being excluded. So how would you approach these 8 stocks? They will be in focus today for sure.
Yeah, so usually we see bit of a traction, especially on the inclusion part, and Vari Energy after this decline from its record highs, we are trading closer to the long-term averages. So possibility of consolidation is high, and decisive break above 3180 can fuel the next leg of recovery in Vari at current. Rest of the counters, they are largely witnessing consolidation. Like Swiggy, we have hardly seen any kind of momentum. While Eternal is also struggling, Swiggy is also hovering in this tight band of 420 to 375. So as of now, indications are mixed. So selective approach means the moment we see a bit of a stability, then only you should approach these counters. For the exclusion part, Titagar definitely looks promising because of late we were seeing some of these railway counters witnessing strong recovery. Yesterday it was slightly down. In case if we get any dip towards 850 levels, then probably we might see the next leg of rebound also in this stock.
Okay, those were all the stocks that will be included and excluded, how to approach them really. But let's take stock of the markets. Of course, 26,000 back on the screen, and it's a good 60-70 point up move on the Nifty. So looks like the bulls are getting into the party mode. Whether or not they extend this up move or not, we'll have to see as we progress through the universe. But what do you do with the likes of Hindustan Copper and Hindustan Zinc? They have rallied in tandem with the global metal prices. Would you say that those two stocks are looking overheated on the charts, and it's perhaps time to at least book partial profits on those two counters?
So certainly, because the kind of move that we were seeing in silver, so it's largely reflecting the same. And now after this recent cool off from $80 mark in the silver, we expect a bit of a consolidation in profit taking. So yeah, the prudent approach at least to book partial profit 50-60% at current levels, and do maintain a trailing stop losses also. Means for Hinge Zinc, a level close to around 600 seems apt, because below this, it can extend this decline towards 570 levels also. And same holds true for Hind Copper, though it's look comparatively stronger. Means yesterday also there was a strong advance. So in case if it manages to hold 490, one can definitely stay put. 540 is going to be the area where we have the immediate resistance. The moment we cross, we might see further gains.
Okay, that's about Hindustan Copper, and of course Hindustan Zinc as well. Let's talk about some of the stocks in news then. Since we are talking about the precious metal lot, I just want to talk about Muthoot Finance as well. Gold prices have also given very solid returns for the year. The likes of Muthoot, Manappuram, would any of these catch your fancy to ride this gold theme? Muthoot Finance is also in focus, given the fact that it has bought somewhere around 3.3 lakh shares of its arm Muthoot Money to raise funds worth 500 crore rupees via rights issue. That's the news bit. But any of these stocks, Muthoot, Manappuram, on your radar?
So Manapuram definitely looks promising. Muthoot, outperformed in the recent run, but after this recent consolidation range breakout, we are seeing that Manapuram has more legs to the upside. I mean, there's a range 295 to 65 is what it was hovering in for almost like a couple of months, and of late we have seen a breakout from the same. So this marginal pullback is basically a buying opportunity to those who missed the rally earlier, and 295 on the positional basis should be your stop loss with the positional target of 345 to 355.
Okay, that's about Manappuram. That's looking better on the charts compared to Muthoot. But I just want to take stock of some movers for the year 2025. Tata Motors passenger vehicles. Of course, the split happened recently. But Trent from the Tata stable, that stock is down 40% for 2025. 2024, it was the showstopper stock, right? How would you approach Trent after this, kind of drawdown that we have, sharp drawdown that we have seen? And even TCS for that matter, that stock is losing 20% on, on a YTD basis. We did discuss IT, but, these two top laggards of 2025, how do you approach that? Is it a good time for a positional bet, or is it a complete avoid at the juncture? Both these stocks.
Yeah. So first talk about trend. So yes, you were right that in 2024 we have had a exceptional run in the month of September. We tested the high of around 8,000 mark, and from that zone to almost 50% kind of a retracement, we've almost tested a level close to around 3950. 3930 on the downside, a couple of weeks ago, and now we are seeing a bit of a consolidation or breather at least. So it's not completely out of woods for any decisive reversal. We need to have something a formation on the daily chart or a weekly chart. So which is not the case yet. But yeah, the downside seems capped because we have strong support of this close around 3900 mark on the weekly chart, which may act as a strong cushion in case if the consolidation extends. Upside 4350 is the immediate resistance. The moment we cross, then probably we can see a decisive trend unfolding, which can help the stock to inch toward 5,000 or maybe higher. So as of now, it's an avoid, but yeah, a decisive close above 4350, definitely one can look for long opportunities with 4200 as a stop loss and 4800 to 5000 as a target zone. TCS, like any other IT major names, but comparatively, if you see that within this space, HCL has done exceptionally well. TCS is making attempt of a rebound, but this zone close around 3300 is acting as a very strong hurdle. So in fact, this entire zone 3300, 3400 might continue to act as a hurdle. So in case if it remains, with the sideways bias, a downside 3100 is something that we anticipate as a support. So broadly, this 300, 400 point kind of a range is something the stock might continue, at least in the near future. A decisive close above 3400 would change its trajectory and will gradually see the stock inching towards 3700 mark or maybe higher.
Okay, that's about Trent and TCS. But another stock that's in focus today is MCX. Morgan Stanley has upgraded the stock to equal weight, and the target price has been raised to 11,135. The stock, of course, has clocked in gains of somewhere around 75% for the year, and even in the last 1 month, if you look at the last 6-month charts, you've seen good gains coming through. 11,200, that's the 219, that's the 52-week high, but it's at 11,077 or thereabouts. How much higher can it go from here? Do you think the steady uptrend that we have seen in shares of MCX would continue here on? How do you approach this stock now?
So it's a very consistent mover, in line with what we are seeing in the commodity prices, which is reflecting here also. Means the stock has gained post this consolidation range breakout from 8,500 to 11,000 plus zone now, and still we are seeing that every dip the buying interest emerges. So yes, you can continue to hold your longs. You can still look for long opportunities. 10,500. That should be your stop loss area. Upside is open since we are at the record high, so one should not concerned about where I should put my targets. As long as the trend continues remain the positive side, you can continue to trail your stop losses. Means the moment we, let's say, surpasses 11,500, 600 zone. You can trail your stop loss to 11,000 levels and ride this rally.
Okay, that's about MCX. But let's talk about a newsmaker. Big, large trade has happened in Privi Specialty Chemicals. Equity worth 9.9%. 9.9% equity worth 1,086 crores has changed hands at 2,799 rupees per share. The stock, of course, is showing down somewhere around 13% or so. We have a few queries as well coming on this particular counter. I think it was Naveen that had sent the query on Privi. How would you approach this stock? Any kind of major breakdown that you are spotting after today's move on the back of this block deal?
So yeah, it looks sideways to weak to us. So as long as we are not seeing anything decisive, at least on a weekly chart, means some sustainability at the higher end, one should refrain from any aggressive longs. In fact, within this space also, some of these stocks they have already done well, but sustenance is something which is the key, which is the missing link as of now. So UPL definitely from the chemical basket is something that you can consider, which we have recommended as a trade also for the day.
Okay, that's the view. I hope that answers your query as well. And of course, it is a newsmaker, given the fact that the large block deal has happened, and as a result of that, you are seeing a 12 to 13% kind of cut on the share price. But let's take up some viewer queries then. On that note, talk about a Canara Bank. Mohit has written in, wants to know your thoughts on whether it's a good time and price to add Canara Bank at current levels. Canara Bank, I think, is one of those mid-sized banks that have done extremely well along with the Federal Bank. So, would you look at Canara Bank from the mid-sized banking lot, or would you prefer something else?
So, after almost like 2-3 weeks of consolidation, Canara Bank has reclaimed its record high in the last trading session with noticeable surge in the volume. In fact, the entire PSU basket, banking basket, looks comparatively stronger than the private payers. So, yes, you can definitely look for long position. In fact, as a disclosure, we have recommended this to our clients also today. What we are eyeing is 164.65 as an immediate target with stop at 148.
Okay, that's the view with the stop loss at 148. You can look at the shares of a Canara Bank. Hope that answers your query. Okay, Privi, we've already answered. Let's take up a query from Alex on Bharat Forge then. The stock was in news. Some contracts it has signed, some defense contracts that it has signed. The stock, is trading with good gains of 1.5%, and it has seen a fairly okay kind of traction in the last 1 month as well. On a YTD basis, it's up somewhere around 13-14%. At 1479, is it a buy? In fact, I think it hit a fresh 52-week high today itself. How would you approach this counter now, and what are the next target levels to watch out for?
Yes, so in fact, we are seeing a very steady recovery post this, phase of decline, and in fact, the stock has formed a fresh buying pivot while holding up the short-term averages. So trend looks positive, and this zone close around 1440 is what we have as the immediate support. So with that as a stop loss, one can definitely look for fresh long positions. 1550, 1560 is going to be the first area of resistance. Then 1650 is something that one can eye as a positional target. So risk reward is also favorable. You can consider going long with 1440 as a stop loss.
Okay, that's about Bharat Forge. Well, I hope that answers your query. But let's take up a query on shares of GIC. Not getting this person's name, but he holds shares of GIC at an average price of 280. Wants to know whether he should accumulate more at current prices. He's making a profit here. Should he accumulate more, or how should he approach?
So yes, he can consider accumulating, because after this phase of consolidation for almost 1 year, we are seeing the stock has been hovering in this very tight band, and probably we see an attempt of a breakout in the near future the moment we cross 400, 410 mark decisively. So with stop at 360 as a trailing stop loss, he can consider adding to his position. Around 430, 440 is something that he might consider booking profit if the view is short term.
Okay, that's the view. You might consider booking profit as well. Hope that answers your query. But let's talk about some of the other names as well. The likes of Lupin. The stock is in focus because it has. In fact, its Netherlands arm has signed a pact to buy 100% stake in a pharma company. The stock is trading with decent 7/10 of a percent kind of gains, but within the pharma pack, how would you look at some of these players like Lupin, Dr. Reddy's, Sun Pharma? A lot has been spoken about weight loss drug as well as to how that could emerge as a revenue driver for some of these companies. Would you look at some of these names, or would you tilt more towards CDMO names?
So basically both, because what we are seeing is like it's been almost 1.5 years of consolidation in most of the pharma names, wherein Lupin, Sun Pharma, Dr. Reddy's, Divis, they were among the top performing names. Means we started seeing the rebound also, and I believe that in 2026, pharma can positively surprise the market because the kind of overhang that we had, especially due to the tariff related challenges and all, that might subside, and eventually this kind of 1 year and 1.5 year of consolidation is likely to end. So probably we can see the next leg of surprise positive swings from the pharma majors, and Lupin is also likely to participate in that move. So in the next run, probably 2250, 2300 is something that the stock might attempt from the near term outlook also. So with stop at 2040, one can accumulate at current levels also.
Okay, that's about Lupin. Just one more query. In fact, because the stock is buzzing, I would like to touch upon it again. I know we already discussed those FNO inclusions and exclusions, but HFCL in particular, the stock is up 5%. It has been a consistent underperformer. In fact, it has been under severe selling pressure. Look at the YTD moves; it's down over 40%. And even the monthly, 6-monthly, 3-month basis, you look at this stock; it has only given negative returns. Suddenly some bounce of 5% or so, and that too after its exclusion from the FNO universe. How would you read into this? Is it just like a flash in the pan, some buying interest emerging? What are the charts saying? Do you think the setup looks bearish from here? And how should one approach this stock? There's a query on this from Vishal Dave as well.
Yeah, so my suggestion to Vishal is that yes, we are seeing the rebound. The stock is up roughly around 8% from the key support zone from the last time. Also means this level close to around 60 was the zone basically where we had the major consolidation last time, and that's why we are seeing this recovery. But we are completely not out of woods. Means 68, 50, 69 is still a very strong hurdle. Until we decisively break this mark, this recovery may fizzle out. So as of now, this 64 should be your strict stop loss, Vishal. And in case if we manage to surpass 68, then 72 to 77 is something that the stock might test. So as of now, it's a hold with a strict stop at 64.
Okay, strict stop at 64. That's the view and that's the advice. Hope that answers your query. And there's a query on HUL as well that's just come in. Not getting the person's name here. Of course, they want to know that some of these FMCG names like HUL have been underperforming. And of course, they haven't really been able to fire up despite the GST cut announcements. One would have thought we will see a good fillip, but kind of fizzled out even during the tax cut announcements in budget last year. They did see traction for some time, but didn't really manage to fire up so much. Last 1 month or so, it has given negative returns on a YTD basis. It has done absolutely nothing HUL. So any thoughts on this particular counter? How should one really navigate this?
So it's been almost 4 years, Nanda, that the stock has done nothing. Means in terms of the price action, 2027 2800 is broadly the range that's been hovering in. You were right that post the GST cut announcement, we were seeing a bit of a traction, but it failed to hold those gains. And again, we are back to the square. Still, we are not seeing any decisive sign of reversal. So maybe market might be waiting for earnings for a volume uptake so that they can take a decisive call on this stock. But within the FMCG space, stock like Britannia, Marico, they are the better place counter. Then we have Godrej Consumers also, wherein we are seeing strength. So as of now, HUL is an avoid. You can consider any of these names from the FMCG basket in case if you're aligned only to the same space.
Okay, that's the view. HUL is an avoid, but all those names that Ajit mentioned, you can perhaps look at them. But Ajit, I just want to get in your thoughts on some of the star performers from the mid-cap universe for 2025, the likes of Force Motors and Ether Energy. These two stocks, I think, 200% or 3x returns for Force Motors and Ether as well. The stock has, of course, more than doubled. How would you approach this stock going forward? They have been the showstopper stocks for 2025 from the Nifty 500 universe.
True, and in fact, Ananda, this auto as a pack has been outperforming in the last almost several months now. So we believe that this outperformance is likely to stay. And Force Motor, after this marginal profit taking phase, has rebounded very strongly, and we are gradually inching towards the record high. So definitely, it looks promising. Means you can continue to hold your longs. 18,700, 750 is the area where we have multiple supports. 21,700, 750, the record high zone is something that you can maintain as a target. Same hold true for Ether also. Means it's a very similar structure that we are seeing in both these stocks. Means after a marginal correction, we are again seeing the stock is inching towards the record high. 780 is something that it might act as a immediate resistance, with 725 as a stop loss. So very short term, it may witness a bit of a breather around the record highs, but overall trend looks positive. So you can definitely consider long position here also with 725 as a stop.
Okay, that's the view on those two showstopper stocks of 2025. But this wraps up our query segment, our very last query segment for 2025. But before we move further and before I let you go, Ajit, talking about the Nifty levels to watch out for 2026, what is your outlook on the technical front for December 2026? What would the target be? And also share your recommendations for 2026 for our viewers.
So yes, it was a year of consolidation for us. Means in September 2024, we were at 26,277 mark. Though we managed to cross this zone of late, but we are seeing bit of a consolidation. So it's a very healthy sign, and that means this shows that after this phase of consolidation, still like for the 10th consecutive year, we are seeing that Nifty is posting positive return. And after this consolidation, it has basically made a ground for the next leg of the up move. So I'll not be surprised if we test 28,800 mark by the end of this year in Nifty. And sectors which are outperforming at present, so be it the banking, auto, metal, they might maintain their outperformance in the coming months also. So the focus should be more on the sectors and identify the outperformers within this space. So let's say from the auto space, Eicher, M&M, TVS, they are the best names which are consistently maintaining the positive trend amid marginal consolidation in between. Then we have from the banking space, SBI from the PSU basket, Kotak, HDFC, wherein we are seeing outperformance or at least sustainability at present. And metal, of course, after this strong surge, yes, we may see a bit of a consolidation, but stock like Tata Steel, JSW, Jindal Steel, they still look promising from the current levels, which can yield decent returns in the next 1 year.
All right, with all those stocks and of course those Nifty levels to watch out for, optimistic view coming in from Ajit. Ajit, would like to thank you on that note for taking out time and joining in. Always a pleasure, and I wish you a very, very happy and profitable 2026. 2025 has been a year of muted returns, although we did hit record highs and we did actually well to end with high single digit gains. But let's hope 2026 will be a much better year for portfolios, because that's really not been the case in 2025. Wishing you a very, very happy new year, and I look forward to more interactions in 2026 as well.
Thank you so much, Nandita, and I wish you the same and all the viewers. May they have much more profitable year. Their small caps also start performing is something that I wish for.
All of us have our fingers crossed, Ajit. With that, thank you. Thanks a lot.
Thank you.
Well, on that note, just quickly take a look at the market. Sectoral movers today. All the other sectors as well doing well, real estate, IT, pharma. So yes, it is turning out to be a good New Year's Eve. Looks like the bulls have finally showed up for a New Year's party, and it's not the year-end blues that are at play today. But with that, completely timed out on this edition of Opening Bell. It's the last Opening Bell edition for 2025. Of course, I'll see you with Closing Bell as well at 3 p.m. But for Opening Bell viewers, wishing you a very, very happy new year. I'll see you in 2026, 1st Jan. And hopefully we will, start the year as well on a sanguine note. Have a good year. Wish you a very bright, positive and happy new year, and a profitable one at that as well. And hope you manage to create a lot of wealth and, see a lot of gains in your portfolios as well. From me and the entire team, thank you for watching. See you at 3 p.m. with Closing Bell.